Good morning and welcome to this Monday, May 8th, 2023 edition of Trading Places Live at earningsbeats.com. I'm Tom Bowley, Chief Market Strategist here at Earnings Beats, and I'll be your host the next 30 minutes, featuring everything you need to know as you prepare for the trading day ahead. Well, let's see. We're starting off a new week. We've got futures right now. I'm showing Dow futures up about 80. S&P 500 futures up a handful. NASDAQ futures down about 20, 22. So a little bit of bifurcated action. NASDAQ right up against resistance. S&P and Dow both have a little bit of room, so I'm not surprised we're seeing a little bit of relative strength away from the NASDAQ right now. Crude oil prices up $1.63 this morning, back to $73 a barrel. So we're starting to get a little bit of a rally there. That also could be part of the reason why we're seeing a little bit more movement toward the Dow and the S&P, not much energy in the NASDAQ. The 10-year Treasury yield up about 5 basis points today, 3.50%. So we've got that back on the rise, still in a trading range, though. I'm looking at about 327 to the downside, maybe about 365 to the upside. So not really a whole lot going on there as we speak. Let's take a look at what happened on Friday. So hold on one second. All right. So you can see the 10 charts that I have laid out. Anybody who's new, essentially what I do is I take a look at the major indices and then pull up the sectors, either leading or lagging sectors from that prior trading day, and just take a look, see if anything major stands out. As I look across, a Dow Jones, I think, is in a trading range, got the 50-day to the downside, recent highs up around 34,250 to 34,5. So we got a couple percent there, but we were up 1.65% on Friday, finishing up almost 550 points. S&P 500 had another big day, up 75, rebounding off of its 50-day moving average as well. That was 1.85%, so really nice move there. But we got overhead resistance still sitting up at 41.79. That's where I want to see the S&P 500 clear. So we got about 1% upside there. The NASDAQ up 269 points. That's 2.25%. We actually did close just slightly above prior closing highs. So we got a breakout on the NASDAQ on Friday, but it was very, very slight, not exactly what you're looking for. I want to see a blowout, and I really want to see it across the board. Mid caps and small caps, you can see, have been in much more of a defined downtrend. I think when you look at the others, I think they're a little bit more constructive, look a bit more uptrendish, especially the NASDAQ. Not so much mid caps and small caps, though. Mid caps did bounce on Friday, though, up 2.11%. That was 51 points. And the S&P 600 small cap index also had a nice day, rising 2.38%. That was 26 points. Needs to break out of this it's a little bit of a bearish flag to the downside, maybe a descending triangle, kind of equal lows and falling highs. But that doesn't execute unless we actually get the breakdown. Normally, patterns break in the direction of the prior trend. So in this case, we're going down. We get into a bearish pattern. We would expect it to break down. However, we've got other indices that are in uptrends. So it's not like everything is pointing down, some pointing up. Small caps, I would argue, pointing potentially lower. But we've seen in the past double bottoms holding, and I'm bullish the market. So I think that small caps have a better chance than we might think of getting that breakout. But I don't like it until we trigger the breakout. So that would take probably up around 1185 to 1190 for me on that S&P 600 small cap index. So watch that level. Then looking down here at the sectors, energy was the best performer on Friday. The group had been beaten up really badly. Of course, crude oil prices had been dropping. We were back down in the 60s per barrel, but now we're back up $73 a barrel this morning. And energy, I would expect, will have another strong day based on what crude oil is doing, unless we get a big reversal back to the downside. But for right now, energy rebounding on Friday looks pretty good. see if we can get back through the 20 and the 50-day, which have converged right up there between 82.50 and 83, pretty close to 83. Actually, they're identical right now, the 20 and the 50-day moving averages, both 82.96. Technology, on the other hand, looks pretty good. Looks like a secular bull market advance to me, looking at technology. Another breakout on Friday, technology jumping 2.5%, back up over $151, well above both the 50 and the 20. The 20 is above the 50. Price configuration looks good. AD lines look good. Not really much to not to like here on the technology chart. And technology, 27% of the S&P 500 is by far the largest sector. So if you got one going for you, that's the one you want to get going, and technology certainly going right now. Financials up about 2.5% on Friday, but this one is definitely got some issues. We've got to get back above probably about 33.5, 33.75 before I'd even consider financials. It's just a weak area of the market, but we did get a nice rebound on Friday. Discretionary, watch this pattern where really the last 6-7 weeks, we've been in this 143 to 150 trading range. I'm waiting to see which way we break. I think we're going to break through the upside, get through 150. If we do, I think we'll go back and challenge that February high above 155. Obviously, the alternative would be breaking down, and that would bring 135 back into play. So short term, we got a $7 range. Longer term, or maybe more intermediate term, we got probably about a $20, $22 range on the XLY. But if the market wants to go higher and we want to get breakouts, and we want to go back and challenge the August highs, I think this will be a critical group. Discretionary is going to have to, I think, push to new highs in order to clear that August high. Materials also downtrending along with energy, but looks a little bit better than the energy chart in my opinion. But we still got work to do. We've been downtrending. I would maybe watch this trend line if you connect these highs. Probably getting back up above this high at about 82 would be good news for the XLB. Otherwise, not looking very good there. Moving on to the 10-year Treasury yield, I want to mention a couple things coming up this week. Last week, we had the Fed meeting. We had the ADP employment report. We had non-farm payrolls. It was a big, big week of news outside of earnings, even though we had a ton of earnings as well. But we also had a lot of economic reports. That's going to change a little bit this week. We've got the CPI and the PPI reports coming out later this week. I think that's Wednesday and Thursday. April CPI comes out first. Expectation there is for the numbers to jump a little bit. So don't be shocked when the annual number goes up, because when April comes out, April 2023, when you look year over year, it replaces April of 2022. Well, April 2022 was lower than what we're expecting to see in April 2023. So that's going to make the annual number jump a little bit. And if the number for this week or for April comes in higher than expected, we could even see a bigger jump. I say this because the middle part of May, especially on the S&P and the Dow, the middle part of May is neutral to bearish. I mean, we don't really have any bullish time in there. A little bit more so on the NASDAQ, a little bit more bullish on the NASDAQ. I'm talking about historically. But the first week of May tends to be good, and we saw a nice rally, at least on Friday. And then the last week of May into the first week of June tends to be strong as well. But other than that, the middle part of the month historically is not very good. That doesn't mean we're going down. It's a tendency. But hey, if I'm going to point out the tendencies when they're bullish, I want to make sure I point out the tendencies when they're not so bullish. And from now till about the 25th of May is not very bullish. And with the CPI and the PPI report coming up this week, if there's a hiccup, that could be enough to get the market down again one more time. And maybe another period, the sideways action continues for a little bit longer. It wouldn't be horrible. I mean, as I look at the, well, here's your 10-year Treasury yield. So there we are. Let me get the update, make sure we got the latest here. Yeah, we're at 3.50, up about 5-6 basis points. 365, I said, was the high I'm looking at, right in this range. And then you've got the lows down 327 to 330. So we're still sitting in the middle. I don't think 10-year Treasury yield really has given us any clue at this point. A breakout above 365, especially 370, that would be gap resistance. And that would also be that reaction high back in mid-March. That to me would be a little problematic. And if the CPI number comes in hotter than expected on Wednesday, we could see this number jump back up near 360 or into the 360s. I would not be shocked. Hold on one second. All right, thanks. So anyway, I think the 10-year Treasury yield right now is just kind of sitting in a range. It's not really going to give us much of a clue for the stock market unless we get a definitive breakout to the upside or to the downside. Otherwise, I think if we stay in this trading range like we've been in here, when you look at the S&P, see this trading range we've been in, kind of coincides with that trading range in the 10-year Treasury yield. It's kind of waiting for a clue, I think. My guess is 10-year Treasury yield ultimately goes down, S&P goes up. If you're in the bearish camp, I'm assuming you're probably thinking the other thing, and hey, anything can happen. Let's see what happens. But if the 10-year Treasury yield were to break out to the upside, I think that would be something that would bother me in the short term for stocks. Then I'd keep an eye on the support level, short-term support level. NASDAQ 100, there's your breakout, just slightly above these prior highs. The big level is August, and the big close in August is 13,667. Now, this is the NASDAQ 100 index, not the NASDAQ. So this is focused on the top 100 market cap companies in the NASDAQ. So we've got 13,667, and we're sitting at 13,259. That leaves us 408 points, which that's about 3%. We need about 3%, something like that. That would be about 400 points. Yeah, it would take about 3% on the NASDAQ to get us back up to that mid-August high. Now we're up 2% on Friday, so it wouldn't, day or two we could be there. But again, heading into this week, after the first week of the month, all the new money came in, the inflows. History tells me we want to be a little careful here in the short term. I can tell you that on Friday, this is more for Earnings Beats members, but I went ahead and took profits. We had the leveraged ETFs, the QLD/TQQQ, however you wanted to play it. Also the SOXL, which was the triple semiconductor. Semiconductors had a really nice day on Friday. Anyway, I went ahead and took both profits. Just because when you start to get up against resistance, let's look at the index here. As you start to go up against resistance on some key indices, I mean, the semiconductors have kind of struggled a little bit here recently, around 7,600. We had a big day on Friday, 277. So if you look at that SOXL, that's the bullish triple semiconductor. This thing was up 6.5% on Friday, up testing its 20-day moving average. When I use leverage, I try to get my money and run, and I try to get in when I'm at a key support level. So when we talked about the SOXL, it was back here on this hammer. So we've had a couple of opportunities really to take profits. I went ahead and took them on Friday. We'll see what happens. Now, when I take profits, I just go back and put my money back in the QQQ. I just get out of leverage. I don't get out of the market. I believe we're going higher. So when the QQQ pulls back, I use that opportunity to get a little out of some of my QQQ, move in to a couple of leveraged ETFs. When we bounce, we get near resistance. I take the money off the table and put it back into the QQQ. So I just take that leveraged profit and move back to the sidelines. And see where we go from here. If we go up, I still got the QQQ. I'm fine. That'd be great. And you know what? If we pull back, I'm just licking my chops. So either way, kind of works for me. But I just want to kind of update members because I was out on Friday and John issued our daily market report. But I just want to make sure everybody was aware of what was going on there. What else did I have here for today? Oh, let's move on to the chart of the day. First thing I'll do is just let everybody know, if you want the chart of the day delivered to your email every day, or excuse me, every other day, Monday, Wednesday, Friday, 3 times a week. If you go over to earningsbeats.com and just scroll down, you'll see an area where you can sign up for our free newsletter. No credit card required, so you don't have to worry about a credit card, anything like that. It's just our way of giving back to our community, people who follow us and support us. I think it's very educational. Try to teach some of the things that we've learned over the years, but also takes a name and email address. So make sure you sign up if you haven't already. And I always like to mention, when we do free events, we reach out to everyone that's on our free newsletter. So we'll send out room instructions. Some of our free events are pretty valuable. Many of them very educational, some of them providing good market guidance. If there's anybody out there that's provided better market guidance than Earnings Beat since 2000, I'd like to know who they are. I think we've been pretty darn spot on for about 3.5 years now. But anyway, I think it's a great way to get to know us a little bit, learn a little bit more, and maybe, you know, after you hang around with us for a little while, you'll see the benefit of joining, becoming a member at Earnings Beats. And by the way, we do have a 30-day free trial for our regular membership. You do have to give credit card for that for us to set you up. But we'll remind you, I promise we will remind you before your 30 days expires. We're not going to sit back and just wait to charge you when you expire. We want to make sure you're enjoying our service. All right. So with all that said, I wanted to show you, actually, let me bring this one over here. I wanted to show you the chart we featured today. So in the Earnings Beats Digest, it was just, well, I finished it maybe about 30 minutes ago. I'm not sure if it's been mailed out yet. I haven't confirmed that. But this was the chart that was featured, LYV. This is Live Nation Entertainment. And I want you to look, this is the seasonality. And I go back through its existence, 19 years. You notice anything unusual about the month of May right here? The stock really likes May. 83% of May's LYV has ended the month higher than it began. So it's gone up more than 4 out of 5 Mays. That's pretty good odds. Again, it's just history, no guarantee, but that's pretty good odds. Also, if you look down here below, this chart will give you the average return, January through December. Look at the average monthly return in May, and I can actually drag this because it's calculating some of May 2023 because we're into May. So if I drag this back 1 year, it takes us back 18 years going through 2022. You can see up here 2005 to 2022. So that gets rid of this month. So it's still 82% of May's, 8.1%. And if you look back, December at 4.4% is the second best month. May is almost double any other month in the year in terms of performance for Live Nation Entertainment. Maybe it's the spring season when it's all getting go. I don't know. I don't know the reason. I don't know if we have to know the reason. I think we just need to be aware of the tendency. So if we pull up the chart on LYV, you can see, well, here's May, went up 15% yesterday with earnings, or Friday. So earnings came out Thursday evening. They absolutely blew away estimates. Their revenue came in at $3.13 billion. Market was expecting $2.24 billion. They beat estimates by $900 million. That's a pretty big beat. It's like almost 40% more than what was expected. They were expected to lose 45 cents. They lost 25 cents. So almost cut the loss in half on huge revenues. Look at that volume come in. I think the open yesterday is going to be a big level now for the stock as support going forward. Watch 74.19. But this is one that was downtrending. I think this breaks that downtrend. We can see the PPO just for the first time in 2.5, 3 months went positive. So we got some good stuff starting to happen there. And even as we went down and set new price lows down here, notice the AD line put in higher lows. So I'm seeing what looks to me to be some accumulation in the stock. Now we're getting good news from a financial perspective, nice gap up, and oh, by the way, May happens to be by far this company's best month. So pays to watch seasonality. This is in our May seasonality chart list that we sent to our members at the beginning of the month. 20 companies. 20 companies that show really strong May historical tendencies. LYV was one of them. Anyway, make sure you sign up for the Earnings Beats Digest so you don't miss these types of articles that we publish 3 times a week. All right, moving on to chart lists. So I wanted folks to see a little bit about what we do. At Earnings Beats, I always say we're market guidance, market research, and market education firm. Really, that's our platform. 3 pillars. We're all about education, guidance, and research. Guidance, we have a daily market report every day, goes out to members. If you've been watching any of my calls for the last 4 years, if you've been following them, I think you've done really well in the market. Basically called the top the beginning of 2022. Said then I thought we could go down 20-25%. Maybe we'd get down as low as 3,500 over the next 6 to 9 months. Well, it was 9.5 months. We went down to 3,491, 9 points away. In June and then again late September, I called double bottom. We went just slightly below it. But since then, we've been going up. Market looks much better. It's ignoring bad news. Everyone said you can't fight the Fed. Well, we fought the Fed and we won. Because the Fed now is basically saying they're done. Or they're certainly hinting toward pausing. We'll see if they're done. But anyway, the research part of it is our chart lists. And that's why I wanted to show you this page. Because we give a little explanation about what we do. We've got a nice video in here explaining the page and how you can use it. And then we've got a number of different chart lists that we organize at Stock Charts. And we explain them. And we explain what's on them. And then we also provide anybody who is a Stock Charts member, extra member or above, because that's the platform we use, I can share all my work with anyone who is also at least an extra member. And I believe that's like 30, 35 a month, 25. I don't know what the price is for it. And they also have an annual thing. You probably can pay, I don't know, 275, 300 bucks or something, get it for the year. But you can, if you can do that, you can take all of our work and download it right into your account at Stock Charts. I'm going to show you how easy this is in just a second. But we have a strong earnings chart list right here. We got a relative strength industry group chart list. This just helps us track which industries are leading the S&P and which ones are lagging. Strong AD chart list, SADCL. We got them all. We got little acronyms for each of them. Earnings. This one only gets updated once in a while, maybe once a quarter, depending on how, whether or not I think that it's something that we track it all the time. But I look to see if there's some really good potential trades on there, and then we pass it out if so. Short squeeze chart list. If you like short squeeze candidates, this chart list for you. We update this one a couple times a month. Strong future earnings chart list. These are just relative strength, nice relative strength performers that are not on our strong earnings chart list. So we want to make sure we still have the best technical charts in a chart list out there. And then this one is our raised guidance chart list. I've updated all these in this particular account that I'm in, but I'm going to show you this one. I haven't updated this one yet. So all you do when you go in here, say, okay, we normally will let members know in our daily market report that, hey, we've updated these 3 chart lists today. And you can go to our website and download them. So what you'll see is right here, it'll say last update, 5/4/23. And so if your update, if the last time you downloaded it was before that, you should come in here, copy this password right here, copy, and then click on this link to Stock Charts. And then it comes up and it says enter password. I paste exactly what I just copied, unlock the list. all of a sudden now, I don't know how many companies it was, 300, 350. These are all companies that have raised guidance. And when you look at each chart, you will see two lines on here. Basically, this is when the guidance was raised, the black dotted vertical line. And then the horizontal line comes across, and probably when I added this, it had come down and hit this low and started to move back up. And so I drew a support level right there. But obviously there, had your price support here. You have your gap support, price support over here. It's been holding all of that. This is one that absolutely could turn, but that raised guidance came quite a while ago. We'll see whether or not that translates into a good quarter. But even if you don't have stock charts, you can go through and look at these one at a time, but there's 350 of them. So you can imagine it's probably going to take a little while to get through all of them. This one, CTLP, just had another big breakout there. VFC, this one kept going down, did not hold support, kept trending lower. Didn't really work. This one came down, hit gap support, or hit this support level twice, and then went running up. So, members can look in here and say, okay, this one's hitting a support level, take a shot. Well, in this case, it would have worked out really well for you. Stock was up, I don't know, 10, 11 bucks, close to 20% in a month. So that's what, just from visualizing them. Now, what you can do as a member at Stock Charts is I can save my chart list. And so what I do is I save it and I replace the old one. So I've already got raised guidance in here, but that was an earlier one. I dated it April 30th, but this was the March one. And so I want to save it. And basically when you hit replace, it's getting rid of whatever you had this chart list before and replacing it with what we just downloaded. So make sure that's what you want to do. And then I include chart styles. So I make sure it's set up the way our charts are set up, and then just hit save results. It'll take 10, 15, 20 seconds maybe. While we're waiting, I'll get some water. The one that usually takes the longest is the strong earnings chart list. Usually takes maybe about, I don't know, maybe 30 to 45 seconds. That one was probably 15, 20 seconds. The more charts, the bigger the chart list, obviously longer it's going to take to save. But all the work, I cannot even begin to tell you how much time is spent on our end at Earnings Beats putting together this chart list, this one chart list. And you saw me download it in 15 seconds. That's what our members get. All of our research downloaded in 15 seconds if they're also a Stock Charts member. And like I said, if you're not, we have, I'll go back and show you, we have an Excel file. So I can get rid of that. Right here is Microsoft Excel. So you can download the symbols into a Microsoft Excel format, and then you can import them, I guess, into your trading platform. I don't know how all that works, but if you have problems, you have questions, you can write into us at support@earningsbeats.com and let us know what trading platform you're using. And we may be able to help sync you up, even in a different platform other than Stock Charts. We do our best. I think some of the main, TradeStation and some of the others like that, I think, we can fully integrate with. But double check that with our support team, support@earningsbeats.com. And anyway, once you have that information, now the question is, how do you want to use it to trade? So there's a lot of different ways, but one thing we can do is we can go back into our site, and over here we have scanning strategies. And so if you like any of these are pretty easy to put together. They're just basic scanning strategies that I like to run. So if you're looking for high volume stocks, this one's a good one to run around 10 a.m. after about the first 30 minutes of trading, and see how many stocks, and you can run this scan against the chart list even. So any of the chart lists that we put together, see which companies have produced heavy volume in the first 30 minutes of trading. Downtrend reversal is one of my favorites because I like to catch stocks when they pull back and they're starting to turn back to the upside off support. Well, what this does is it gives us every stock that has been printing lower daily highs for 5 days in a row. And then yesterday, for the first time, or today, if we're running it during the trading day, today for the first time, prints a high that's higher than yesterday's daily high. So you've been going down, putting in lower daily highs for 5 days in a row. And then the first day we tick back up, it comes out on the scan. So when you click on this link on our website, watch what it does. It takes us right over to stock charts and puts it right in the scan engine for you. Can't get much easier than that. And then if you've downloaded our chart lists, let me just see. All right, so let's go with strong earnings. We'll add that. Raised guidance. Let's just do those two. So now what you have to do is you need to put, what I like to do is put an or clause in here. So you do have to put in the bracket here. And then you need to put in another bracket over here, the opposite bracket. And then you have to change this right here to or. And how long did it take me to do all that? Click on the link from our website, pull up these two chart lists from our, from that drop down menu, and then put in the brackets on both sides and change and to or. Now what this will do, it'll give me any stocks in these, either of these two chart lists. If I put and, then a stock has to have both beaten it has to be on both our strong earnings chart list and it has to have had raised guidance. If you change it to or, it can be on either one of these two chart lists and we'll get the result back. And that's what I really want. If I know companies raise guidance and it's gone down 5 days in a row and now it's all of a sudden reversing back to the upside, that might be some pretty good information. Same thing with strong earnings. If there's a company that's come out, they've beaten revenues and they've beaten earnings estimates in their latest quarter, they go on our strong earnings chart list, assuming they're liquid and that their technicals still look decent. And we probably have 400 or 450 companies on there. Now we can filter it even further by finding companies that had pulled back and now are turning back up. So we've just opened, market opened 2 minutes ago. I wanted to run this while we had the market open just to see if there's anything that came up today. Now, what I can do is after I run this, I can run it again saying starting one trading day before today. So I can check to see if anything like that posted on Friday. But right now I want to see if anything did it today. So let's run this scan. And right now we have two. So on those two chart lists, we have two companies that put 5 lower highs in at least 5 days in a row. It could have been 7 or 10, at least 5 days in a row. The highs were lower. And now today, already in the first 2 minutes, we put in a higher high than we had on Friday. Now, does that mean, that guarantee us that we have a reversal? No, but you can't get a reversal until you have a higher high. So it's at least informing us of the stocks that could potentially be reversing. And I'm going to tell you what, when you're trading, if you catch stocks when they are just turning to the upside, rather than chasing them after they've already gone up 5 days in a row, this is where you make much, much bigger profits in trading. Let them pull back and then start to turn back up. Let's take a look at these two and just see if they're worthwhile. Sometimes I look at them, they're not. This one, I'm not really excited. I mean, you can see that here it went down 1, 2, 3, 4, 5, 6 consecutive days of lower highs. Today it's moving back up, but we're like, what I would like to see is this pullback maybe either come back right to the low or maybe back to a 50-day moving average or to a key price support. Those would be the things that would interest me the most. But you can run this stuff every day. Let's check out SIG. This one now did go down and basically tested this. We're in an uptrend. This is a pretty key level for this stock in this uptrend. Now it has already moved, what, $3, $3.50 from where it was on the low. So that makes me a little bit more nervous because you're still trying to evaluate reward to risk. So these two stocks, I personally wouldn't place a trade, but who's to say this stock later today isn't trading down at 68? And then you've got this pattern potentially of higher highs and higher lows going back to the upside. So this is one that maybe at 68, 68 and a half, I might be interested. I'm just probably not going to be interested in 70, 62. But that's how you can use our scans, our chart lists, all the work we do. I'm telling you, it will save you thousands of hours throughout the year, the research we do. It's pretty amazing stuff. And like I said, the one here was the seasonality for May. And LYV was the number 8. There it is. There's the 8.1% I showed you earlier. And also in the name of every one of these is the name or the ticker symbol, the average May return, the percentage of time that Mays go higher. And then I also even put in here earnings date so that you'll know 5/4 after the market closes. So it reported last Thursday after the close. But we've got some that'll be reporting here. You've got Electronic Arts going to be reporting tomorrow after the close. McKesson, MCK, reports today after the close. So it just lets you know that, hey, okay, if you like playing these seasonality stocks, just beware, we do have earnings coming out. That's going to add a little fire to the volatility. We could go either way with earnings. Maybe you like that. Maybe you like the fact that earnings is coming up in a strong seasonal month. Maybe you don't. Maybe you don't want to take that risk. Up to you. We give you the information. We do the research. Tons of research that we do. Anyhow, I want to give you a good idea there. Not really a whole lot else to go over today. So let me go ahead and just close this up. Let's take a look, see what the market's doing. Still a little bifurcated, but not really much. Still around the flat line. The VIX up off of the lows recently. We did go down below 16. I will tell you that in every bear market, since the volatility index has been provided to us, in every bear market, when we have gone below 16, we never break again back to new lows, with one exception. That was in the secular bear market, and I was corrected on this because I used to say it never had happened. Technically, the way I look at it, it's never happened, but let me explain how it did happen once. In 2000 to 2009, we were in that secular bear market. So in 2000 to 2003, we went down. And during the cyclical the cyclical bull market from 2003 to 2007, the VIX went down below 16. Now, what I meant is that the 2000 to 2003 bear market had ended. Let me show you the S&P 500. Maybe it'll make a little bit more sense. So right here, see this bear market? When this started recovering, the VIX went back down below 15 or 16. And so this low ended up being the low of this particular bear market move down. Now, it was pointed out to me that, hey, we were still in a secular bear market and we ended up going lower 6 years later. Technically, that is a correct statement. So I did corrected, but it really wasn't what I meant. What I meant was the actual downtrend itself. This one, this one, this one, this one, all of these, 2018. Every single time, once the VIX has gone back down below 16, in that particular downtrend, we never went back down again, ever, to another low. So for me, the fact that the VIX went back down below 16 last week, that tells me that 34.91 low that printed is it. It's just one more signal. I have plenty of them, I believe. that tells me that bottom is, that's it. But anyway, just wanted to point out, maybe clarify a little bit on the VIX. But yeah, that's market started off kind of flat today. We'll see what happens the rest of the day, rest of the week. I do want to thank everybody for tuning in. We're trying to build up this YouTube channel. So if you know anyone who is interested in stocks, if you think they would like our style and our strategy, please feel free, pass it along, let them know to join us here Monday and Wednesday. That's when we stream. But we also have a lot of YouTube videos out there if you want to go back and check some of them out. Be sure, if you're watching this, the recording, please like our video. Love to, get as much support as we can. It lets me know that you really appreciate some of the stuff that we talk about here. And then also be sure to subscribe to our channel. You don't want to miss anything. So make sure you hit the subscribe button. Anyway, that's it for me. Everybody have a great day. Hopefully we get this breakout eventually above that August high. That's what we're looking for. Maybe it happens in May. We never know. Have a great day, everybody. Happy trading.